let's go do the special segment about the Canadian dollar. Our 5 points today about dollar CAD. Well, the first and most obvious thing, Canada is an oil exporter, and the Canadian dollar moves a lot on oil prices, especially in the past year and a half or so since the big plunge in oil prices certainly moved the Canadian dollar. I would mention that sometimes the correlation is stronger and sometimes it's a bit weaker, okay? So when we have bigger moves in oil prices, then we have also a tendency of the Canadian dollar to react more to oil, okay? And ignore domestic data. When things are very, very stable, then we have internal data such as trade balance, jobless, the employment report, housing figures, wholesale manufacturing sales, you name it, GDP, which is released once a month, okay? Yeah, all these have moved the Canadian dollar more, okay? But oil, even when it doesn't have a big impact, it can show us the relative strength of the Canadian dollar. What do I mean? In many periods, especially in the last few months, we've seen sometimes a vulnerable Canadian dollar. Each time that oil prices fell, Canadian dollar tumbled down, okay? But at the same time, when oil prices did recover, did rise, the Canadian dollar hardly moved, okay? This can tell us, this can give us a clue about, in this case, the Canadian dollar is vulnerable, so that when we have also news indicators released in Canada, GDP, for example, jobs report, we have a tendency for the Canadian dollar to look for something bad, okay? So if we have an okay jobs report, when the Canadian dollar is vulnerable, the Canadian dollar will suffer a blow, okay? And on the other hand, when the Canadian dollar rises with oil and sort of slides in oil prices, we can expect the Canadian dollar to look for the good things in the data. When things come more or less as expected, the Canadian dollar can rise. So the second point in our 5 points about dollar CAD is that oil can serve as a measure of strength or weakness of currency. Another characteristic for me for dollar CAD is that it's a bit slow, and that's a good thing. It gives the discretional traders, the ones that are reading the data, analyzing it, and then reacting, gives more time to react, okay? We've seen it many times with jobs reports. Of course, we had an initial reaction of, if it's a good jobs report, initial jump in the Canadian dollar, but then we had a follow-up, okay? It wasn't like in the NFP that we see jumping up and down. Well, not this Friday, but sort of we've seen movements extend and move sort of very slowly, allowing traders to jump on the bandwagon, okay? And that's a bit different from other currency pairs. That's what I've been observing. Point number 4 is when trading news figures, news releases in Canada, should always look at the calendar to see if there isn't a US figure at the same time. So most indicators are released at 8:30 GMT, half past 8 Eastern time, which is also the main time zone of where most of the Canadian population is, in Toronto, Ottawa, Montreal, okay? And things used to be a bit different. We had, for instance, the jobs report released usually on the same day with the non-farm payrolls in Canada, but an hour and a half earlier, okay? So instead of 8:30 Eastern time, it was released at 7 Eastern time. That means, that means instead of 12:30 GMT, it was 11 GMT, okay? And that allowed some time for reaction. Now, in many cases, we have the releases at the same time. Trade balances always together. All these countries trade a lot with each other. And also other figures in general. What we do see is that the Americans usually are more eager to get the jobs report out as soon as possible, like we've seen this Friday. Always the first Friday of the month. And in Canada, sometimes it's the second Friday of the month. So, for instance, this week, the Canadian dollar has the full stage to its own, and we could have a true reaction. But in many cases, when we do have both figures released at the same time, it becomes messy. And if there's one pair not to trade, when we have these double features, that's dollar CAD. And a comment about technical behavior, because we talked about this. I mean, I was bashing euro dollar for technical behavior, and there are some currency pairs I do like. So I would say the Canadian dollar is sort of medium. It has better quarters, it has worse quarters. I think in recent weeks it's okay, but it's sort of not, in generally speaking, it's not the best of currencies, not the worst, okay? So yeah, so you could enjoy a slow reaction to news releases, but don't expect the technical levels to always be respected. Well, no currency pair respects all levels, but yeah. But in any case, the Canadian dollar is sort of somewhere in the middle. Okay, so that's a special segment about dollar CAD. Maybe we'll look, if we talked about this, talk a bit more about current levels in dollar CAD. Well, I just talked about its mediocre technical behavior, but this double bottom here at 129.10 is very clear to see, touched on Friday, and a very nice technical behavior, right? But yeah, this 130.80 line, which worked for quite some time, is now was shattered, was eaten in both directions. Anyway, I would say that 130 remains a very strong line to the upside. Okay, 127.50 is a strong line to the downside if 129.10 is broken. And I don't think it appears here on the hourly chart. For some reason, my charts are moving a bit slowly this morning. But on the daily chart, we can see that 133.10, if I'm not mistaken, is a strong line of resistance. Okay. Some Monday blues for my charts here. Not reacting. I was talking about the slow reaction in dollar CAD and also this trading view chart. Maybe I should restart my computer. Anyway, so that concludes our coverage special segment today, special column, if you wish, on dollar CAD. Okay.